folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. Before we get started, let me apologize for the lack of a show last night. We actually did record it, but had a lot of difficulty getting it out the door, so to speak. So we never did get it posted, and I apologize. This should be the last time because we have made that transition that we were planning on making, so that we're not dependent on a provider that was having difficulty actually providing. And it's the growing transition, the growing pain, so to speak. So let's get started with what happened today in these markets, and let's take a look at what's going on. So if you flip over here to the S&P 500, actually let's look at the ending numbers first. We had a real struggle, and that is that last night I had the show printed and actually shown up so that you could read it. You would have heard me say that we should bounce today, and we tried really hard, but at the end of the day you didn't end up with much of a bounce. The only one that could hold the bounce was the NDX. At the end of the day, the big story really was the Russell just caves in 1.45% lower, 16 points, down to 11,000 again, and it breaks swing point lows. Russell looking pretty tough here. Elsewhere, red, pretty much across the board, with the exception of our friend the dollar, who just continues to power higher. Fast currency moves many times lead to equity indigestion, and that's, I believe, what we're seeing here and continue to see. Commodities crushed, 3% lower on oil. Silver almost 2.5% or over 2.5%, 0.43. Gold gets hit again, just straight down the board, across the board. Everything gets socked as the dollar continues to rise. Let's pop over to the charts. It is the end of the month, so we actually can look at some of the end of the month charts as well. Some of them are interesting, some aren't. But if we look here at the S&P 500, we actually had higher volume come in. Now maybe that's just end of month, but you're pushing lower, you got higher volume come in. That's not a particularly good thing. If I look at the Dow actually pushed higher and then closed lower, had the higher volume. So that was a little bit more positive. Looking at the NASDAQ, again, like the S&P 500, pushing lower as volume expands. The NDX, as we talked about, was the only one that could hold up. That one actually held price right at, just above. Volume was a little bit heavier. This one got fairly close to the top of that bar, not quite. If we look at the XLK, that one actually tried to test the bar, missed it by 2 cents. And I'm talking about the top of the breakdown bar, is the 25th. Much heavier volume today across the board. Maybe that's the end of the month window dressing. Maybe it's something else. Maybe some of those trades get unwound tomorrow. But we should have bounced today. We were unable to bounce, and when the market can't do what it was supposed to do, that's always a sign of it's going to do something else. And something else looks to be what's happening here with the Russell. Russell breaks the swing point low, has the volume on the break. So the prior swing point low doing 378, you're doing 395 on this one. That's a break, folks. That's with volume. And if we go over and take a look on the Russell on the weeklies, if we hold underneath here, it's going to be a break on the weeklies as well. Now we're 2 days into it. We got 704. Let me see, 704 is about 355 times. That's 15, 17, almost 18, and we had 17 over here. So we're going to have probably as much volume. So if you hold underneath it, you're going to break on multiple time frames, and you're going to break with volume on both of them. And that's on a straight stretch down. Now, what that tells me, you know, when you break, you usually get 2 to 3 bars extension on the break, which means it's probably going to make it down here to test these. But if you can see, there's huge volume down here on this particular bar back in February. And given the extension already, I doubt seriously that you can break it the first time there. If that's true, and if this does extend down, right, that's going to let these other indexes, if we go back over to, say, the S&P 500, that's going to let those break down and bring them back to what we've been talking about, which is actually in this price zone somewhere down into here. So you'd get the push down here as the Russell goes down to test those lows. That would probably set up the bounce trade, right? And then the real question is going to be is what happens on the bounce. Are you going to find resistance on the bounce? So you come down, you know, if it happens this way, you come down here and now you try to bounce back up. You know, can they pull off another V shape to the moon kind of thing, or do they come up and actually fail? And folks, if they come up and they fail, and there's a good chance that they will if the Russell does start to break, that's going to be an ugly scene. So keep that on your radar. Okay, so that's the indexes. Russell's the only one given a clean read tonight, and it says lower. You're getting a mixed read on these others also saying lower. So, you know, if I have to take a read on just the indexes, my impression is that these guys are going to try to trade lower tomorrow. It is, again, first of the month. You got a lot of data coming out, PMIs, so forth. You still have the situation in Hong Kong that could get worse or potentially get better. But I think, you know, there's going to be more pressure from Hong Kong before it's over. And in that regard, that's a bad scene. Now, I actually wanted to point out one other thing while I'm here before I flip over to the sectors to kind of wrap up the summary. You got potential ABCD structures now, right? And this was a question from last night that I answered but nobody heard, and that is did we have, the question last night was, did we have an ABCD structure potential in the S&P 500? And the answer was no, we didn't, because in my book, what you need is you need a higher low and a higher high on the thrust. So in other words, we got to here on this big bar down, but we couldn't get a higher high, higher low. In other words, we got a higher low but not a higher high. So you go to the next bar. Do you get a higher high on this bar? No. Did you get a higher low? No. Go to this bar. Did you get a higher high? Yes, you did. And you got a higher low. And when you get that, now you've got the potential for an ABCD structure. And you see potential ABCD structures in some of these indexes. You just saw the Russell break one. If we start to turn lower from here, that is the ABCD structure down. And it actually is a pretty good sized one now the way it's set up. Let's do the measurement real quick. 2019, and this low is going to be your low now. That's 1964, so that's roughly, what, 36 plus 20, what did I say the top was? 19 plus 36 is 45. And if we come straight down from here, and today was the high, 45 off this high would get you down to 40. So, excuse me, 35 would get you down to a little bit lower than what we've been talking about. We've been talking about 38. 38 was the top of this bar, 37. So it's going to take you right into that zone, right into that area. So that ABCD structure, again, not to belabor this too much, but that ABCD structure would take you right into this area, right into there. Okay, so we'll see how that shakes out, how it ends up playing out. So, but that's, you know, the potential's there finally. Sector-wise, same thing. You got ABCD structure potentials bearish on the sectors. Volume expanding on some of them. Some of them still looking okay. We'll dig into those next. World markets, same sort of scenario. World markets under pressure in some cases. ABCD structures there, and failures on the monthly in some cases as well. So a lot of pressure building here to try to take this thing lower. And that is the summary. So let's dive in a little bit deeper here into some of these sectors. We'll start with the IBB. And I've started using the IBB as a one of the main sectors because it has so much influence on the NDX. If we look at this low, it's doing a retest, or has been doing a retest regen, immediate one, off this prior swing point high. And the low of that high got underneath it here, got back into it there, and now we're back underneath it again. This looks like it's about to break down and going to expand that range down. If you do that range, your ranges are about from here and then the one below it. And if you get back up underneath here, then you try to go for the lows again. So this one is very close to trying to get a push to the downside. That's the IBB, which is the biotech, the NASDAQ biotech. IYT looks a lot like we've seen in some of the others. You push up, you have volume. You actually had good volume on the push. Is it going to matter? I don't know, because it actually ended lower. And when you get that kind of a push and then you end lower, yeah, you can go back up there, but you don't have to. So that's a potential ABCD structure as well if it does start careening to the downside, because you did close lower with volume expansion. If you look at the SOX, and now the SOX is kind of interesting because you actually have a failure at the highs, a 2-bar reversal on the SOX with respect to the monthly. If I pull up the monthly chart, so you get a long extended move, ABCD structure's done, everything's happened here that was supposed to, right? You get your move, you get your ABCD structure, you're more than done. Now what do? You come up here, you go over the high, back underneath it, less volume. That's a 2-bar reversal after an extended move. That's a failure, and that should finally put a cap, on this SOX. At least it will go sideways to lower is the read. So the SOX on a monthly basis looks like it's going to try to careen back in here. On the weekly, it's over the top, back underneath it now. And then if we go back to the daily chart, let me grab the daily chart. If we go back to the daily chart, you have the ABCD structure. Yeah, you have the ABCD structure, and this one's actually been in place for a while, just waiting to continue. So you had it here, you were starting it down, you kind of bouncing around here waiting. That one's going to try to get down into the support zone. And I didn't point out on the IBB, I want to go back to the IBB right quick, because again, a very important sector with respect to the NASDAQ, the NDX. This is a test failure at the highs, folks. 275.40, you get over it, you're back underneath it, you got a lot less volume. That's a failure at the highs. I think this thing's going to try to flip around and come back down again. So that's the negative ones. IYT still looks okay on the longer term. XLB is, it's kind of having a hard time here on the short-term time frame, coming down, volume expanding, and I guess that's not a surprise given the way the dollar is acting. XLE, same thing. You got a huge push down in oil. This thing blows out volume again, actually closes under that low again. The ABCD structure that was in place here on the weekly is done, yet it's into this bar, and given this, it looks like it's going to try to extend to the bottom of the bar now. And let me see, on the monthly, nothing really was happening on the monthly yet, although it did come off with some volume expansion on the monthly. Looking at the XLF, this is a key sector, and this one actually has the potential for the ABCD down as well here now finally on the daily. And so there's that potential, move down. This one still looks okay elsewhere. It's not doing too bad on the weekly, on the day, on the monthly. And just let me highlight a couple more. XLI, kind of an important sector. Volume expands, test up, closes lower. XLK is the one I was talking about. Almost got, this is the only one that's gotten close to this high. Top of that bar was 40.10, gets to 40.08, has less, a little less volume. That looks like it potentially is a failure tonight. XLV has been the other strong sector, so XLK, XLV have been the strong ones. This one just set up a possible ABCD down, and those are the main ones. So, you know, when I look across the sectors, they look to me like they want to go lower as well. And then if I flip over to the world markets definitely going lower. Let's look at some of these together and look at the damage that's been done. Here's the all ordinaries. You talk about a collapse. That's a collapse, folks. Collapse, higher volume today on the daily low. That one's going to try to push lower. You broke on multiple swing points, volume expansion. That's just downright ugly. If you go to Brazil, you got the same case. Pushing with volume. Breaks all these swing point lows. Folks, this is ugly stuff. This is the kind of stuff that can lead to even lower price points. If you look at it on the weekly, ABCD, actually it wasn't an ABCD, it hasn't had a B point yet, but it just broke out a swing point low, looks like it's going to hold it. And if you look at this guy on the monthly, comes off, volume starting to expand again as it's coming back in. It is going to do a retest, regen off this high. So, you know, there is hope here at some point to get the bounce, but it is coming in there. It's going to try to test it. And that is the way it looks on some of the worst indexes, right, as you go across the board. Another one is really interesting. This has been the strongest one, is the Nikkei. Nikkei pushes down last night, has volume, does close just over 1617, oops, the low, 16,170.86, closes just over it. Volume expands, right? Not quite as much volume. It's going to try to bounce again tonight. But take a look at this on the Nikkei. If we come over, we look at the monthly, what did it do? Monthly goes up, that top 16,320. You get over it, you close underneath it, you got less volume. That's a failure at the highs on the Nikkei. And I don't know if that is going to stop this dead in its tracks, but just like we were just talking about the IBB, right? This thing trades down, back up, fails at the highs. I'm suspecting that one's going to try to start working its way back the other way. And you know, does that mean that the money printing press in Japan is going to quit? I don't think so, but this chart is telling you that they're not willing to pay up at higher prices. Okay, last set of notes here, and then I'm going to take another question that was emailed in last night that I did touch on, but unfortunately did not get broadcast. Is the ox markets. Look at the dollar, folks. This is a huge move. This kind of a move in this time period, 6-7%. You know, it's not that it's not unprecedented, right? I mean, it's happened before, but that kind of a spike, that kind of, you know, currency spike, and you've got just the opposite, of course, in the others against the dollar. Those kinds of moves rattle markets, and these markets are getting rattled as a result of it. So, you know, when you look at something like oil in the collapse today, huge volume coming out of this thing, thank the dollar, because the dollar is what's doing this. The rapid move in the dollar is crushing commodities. Silver, crushed. The only one that's even trying to hold up is gold, and it's still struggling. And if you put gold, and let's look at these on a weekly. If you put gold on a weekly, it's coming after its swing point lows down here. It's underneath this one already, so it's already broken down. You're going to try to go farther. Put it on the monthly. These are the lows. It doesn't have the volume on the monthly. You can see it here. The volume is not there, but it looks like it's going to continue and try to test them. So you got some major, you know, collapse taking place in these commodities off this dollar. Here's the ranges. Break it, project another range down, that's going to get really ugly. You're going to see a lot of gold miners go out of business if that happens. A bunch of them cut back, which of course eventually will turn this thing higher again. But it's starting to look pretty ugly for gold, for silver, for all the commodities, copper, every one of them, right across the board. All right, let me pop over and take this other question. There was a question last night about McDonald's. That question had to do with these wide price spread bars that we're printing on McDonald's. Last night, this is interesting because last night they had this big spike up, and last night I actually said, don't believe this spike, and look what happened today. And the reason for that was, if you go over, and the question here actually had to do with, let me go back to the daily right quick. Question had to do on the daily saying, hey, there's a lot of wide price spread bars here. What does it mean? And I believe the reader was looking, or the questioner was looking at trying to buy this thing, especially with maybe with that pop yesterday. The problem, you can't see it on this chart, but the problem is if you go over to the weekly. And one of the things, you know, we do at TA Today, anytime you pop your charts up, they pop all 3 time frames. It is so important to always look at all 3 of your time frames. I don't care if you're trading just the daily. You've got to look at the others, because a lot of times the others are going to override you. In other words, they're going to prevent something that looks really good from actually happening. And what was that? Well, there was 2 things here. One, your target at best was here, right? The breakdown bar. Top of the breakdown bar is where all the volume is. If you get back over that, it's a totally different story. But getting over it's going to be heck. And it's going to be heck because there's swing point highs over here, right? This was a clear breakdown area, right? You can divide these up, and I do it so many times with the range trades. Divide them up into ranges and take a look at them, right? This one held the lower range, but it's going to try to make another one down here. Why is that? Because there's volume at the bottom, right? So this spike up is short covering. You're going to come back at some point and try to test those lows. And it looks like it may be sooner than I even expected. Last night I said I didn't know how soon. Maybe it's going to be sooner than we expect. Expect it to get back into high of that bar, and if it does, and if it stays into it, it's going to seek the low. It's going to be like a heat-seeking missile going after the low. So that was the read on that one. Let me quickly check here, make sure I don't have any more for tonight. Yep, here's one. And nope, not there. So let me quickly check the text. And I don't think we have anything there either. Doesn't look like so. You know, folks, if you want to participate in the show and you want to contribute, all you got to do is pop over to the site, come over to TA Today, pop into the TV section here. This is where, of course, you can click, come over to YouTube, a little shortcut for you. But you can email me or you can text me. Either one, I'd love to take your questions. I save the last 10 minutes of the show for you. If you don't ask questions, I'm probably not going to broadcast those extra 10 minutes. So it's really up to you to participate if you want. If you don't have any questions, and it doesn't have to be a particular stock. It can be general questions, you know, like what the heck is happening. But whatever it is, you know, I'd be happy to try to entertain your thoughts. It actually, it's not so much the desire to have you talk as much as your interaction. You know, you folks are smart too. Y'all ask good questions, and when you do, it stimulates me to think about things I probably wouldn't think about. It makes the show more entertaining and interesting and valuable for others as well as for you, and allows me to you know, consider things that I don't think about. And a lot of times when I go off and start writing pieces, as I did here, let me pop back to the front page. If you haven't read this article, please come in and see it, Pulling in the Horns. I talk specifically about what was happening and did happen today. You know, take a look at that because it's a good read. And, you know, an idea of what is about to potentially shake out here. So, all right. I thank you for joining me. Again, apologize for last night. I think we're back on schedule here. We're using a different vendor now. I don't think we're going to have any more issues. This is a vendor I used to use and now we can go back to them and present a nice, clean, crisp show for you. Have a great night. Take care of yourself. I'll see you next time. Till then, I'm LA. This is and it was your daily TA wrap. Take care. Good night, folks.